The panel will be about diversified economies and long-term investment opportunities for socio-economic development. And Karina, I will hand it over to you.
Thanks you so much. Thank you. Good morning, everybody, and thank you for being here. I'm absolutely delighted to be here moderating this panel. Very, very great lineup that we have. And I'd like to start out by just giving you a little bit of background and introducing everybody. Perhaps, I'll start sort of from Mr. Ghassan, who's sitting directly to my left. Ghassan Nuqul is vice president of Nuqul Group, which is one of the biggest industrial groups in the Middle East. He served on the Economic Consultative Council to His Majesty King Abdullah II, and he's also involved with a number of governmental councils in his native Jordan, as well as international business associations and NGOs. He's on the board of a number of companies, including the Kuwaiti Jordanian Holding Company, Integrated Olive Products Company, and Delta Insurance. Mr. Nuqul studied at Purdue University in Indiana, where he received a bachelor's in industrial engineering and also a master's in business administration. Thank you so much for being with us this morning. Next to him is Mr. Hussam Saadi, who currently heads the Middle East and North Africa team at HSBC Private Bank in the UK and the Channel Islands. Previously, Mr. Saadi led the London-based Saudi desk at HSBC Private Bank and also worked at NCB Capital in Saudi Arabia. He studied at Boston University in the United States, where he obtained a bachelor's in system engineering, so we have another engineer with us on the panel, and obtained his MBA from the Thunderbird School of Global Management in Arizona. Next to him is Mr. Ahmed Galal Ismail, who's currently CEO of Majid Al Futtaim Ventures, which is a subsidiary of Majid Al Futtaim Holding, which many of you may know is a large conglomerate in the MENA region, which operates in 8 countries across a range of sectors, including fashion, retail, and entertainment, as well as healthcare. This company rather, is also the company behind Ski Dubai and Vox Cinemas, which any of you who visited the Middle East will be very familiar with. Mr. Ismail also served as a vice president at the parent company, Majid Al Futtaim Holding, and he previously worked at Booz Allen Hamilton in Dubai and Procter & Gamble in a number of cities, including Cairo, Frankfurt, Mexico, Geneva, and Saudi Arabia. He holds an MBA right here from the London Business School and has stayed connected to the university as president of LBS's Gulf Alumni Association and also a member of the International Alumni Council. Thank you for being with us, Ahmed. And last but not least is Mr. Sulaiman Arubai'a, who is a partner at Global Capital Management, GCM, which is the private equity arm of Global Investment House of Kuwait. Obviously, many of you may know, is one of the largest GCC-focused investment banks. GCM, which is the private equity part of that bank, is one of the largest private equity firms focused on MENA investing. Mr. Arubai'a started out his career here in London and then moved to GIH. He followed that with a stint at Eastgate Capital Group, which is the private equity arm of NCB, or National Commercial Bank of Saudi Arabia. So we have another NCB alum, 2 NCB people on our panel. And then he rejoined GIH as a partner at the private equity side of it, GCM. He's also chairman of Jazeera Steel Products, which is a company in Oman, and a board member of a number of other companies in Kuwait, Saudi, and Turkey. He studied engineering at Cornell University in upstate New York and is an alum of the LBS, where he also received his MBA. So thank you all so much for being here. I think we have a really, really diverse panel, which is great. And I'd like to start off the conversation by asking each one of you to just give us a quick, brief update in sort of under 5 minutes, if possible, about your current involvement with the Middle East region and any key issues that stand out for you in your business today. And perhaps, shall we go the other way? Shall we start with Sulaiman at the very edge and work our way inwards? Thank you.
I'll make it short. Sorry, my voice might be cracking. I just have a cold. Basically been dealing with private equity investments in the Middle East, and a lot of the discussion points that were raised with Mr. Tousa actually is things that are very, very familiar with us and we have to face on a daily basis, whether it's wasta, whether it's nationalization of the workforce, or let's put more of demartization or Saudization or Kuwaitization or Omanization or whatever term we want addition to it. Because both of them, usually it's a double-sided argument. I mean, there's one side where it is helping the countries, and the other side it's really destroying industries. I think in private equity we see them on a daily basis in the MENA region. We were one of the first firms to launch private equity back in 2003 in the Middle East, and it was more of a very steep learning curve. We're managing now 5 funds with around commitments of around $2 billion US dollars, all of it invested in the MENA region, including Turkey. So we've seen also the changes between the different countries in the Middle East as well, and comparing it with the countries that are a little bit more sophisticated, let's say Turkey, in terms of the capital markets or the regulatory framework. And I should be able to compare, I guess, the two different sides of investing in this region.
Thank you, Ahmed.
Well, I mean, our business is exclusively in the Middle East. We are a Middle East company. We operate across more than 12 countries now across the region. And many of the points that David has raised in his presentation and the subsequent Q&A really resonates with some of the challenges we are facing as a big employer in the Middle East. To give you a flavor, we employ around 26,000 people across our footprint, which makes us one of the bigger private sector employers in any of the markets that we operate. And certainly issues around workforce participation, around the ability to attract local talent, not just at the shop floor level, but also at the management level, is clearly a big challenge for us. In the opening remarks, you mentioned the fact that Majid Futain is a conglomerate. And actually, we tend to think ourselves as the exact opposite. We are not a conglomerate. We are a shopping, retail, and entertainment business. So we are exclusively focused on the service sector. And in that regard, when we think about capital deployment and how to allocate resources, the question for us is more about allocating capital across geographies rather than allocating capital by business. And as such, some of the earlier remarks around transparency, around the geopolitical risk that is now that we face across the region, and some of the tensions that David pointed to in his presentation are very relevant for us. So I guess to answer your question, our involvement in the Middle East is exclusive. We are from the Middle East, and our business is 100% dedicated to the Middle East.
Excellent, thank you.
Well, first of all, I must say it's a real honor to serve with some of the members of the panel, and happy to be here. Here at HSBC, here in the UK, for the Middle East team, we try to focus on institutional private clients who have needs beyond their borders, and or try to put together resources from our UK team to help them grow their businesses within the region, because we have a footprint within the MENA region and a presence there, and a private equity team. We help our clients find opportunities, and there are opportunities within healthcare and within the sectors that rely on the demographics that David talked about in his presentation. And we focus on not only managing their wealth, but also helping them grow their businesses. Mm-hmm. And I look forward to discussing it in the question and answer section later.
Thank you, Hassan.
Thank you, Karina. And it's also a pleasure to be here. The Nucol Group was established in Jordan in 1952 as a trading company in FMCGs. And today the group comprises 30-some companies in the MENA region and North America. We have two subholdings. One is pulp and paper, and the other one is a combination of many industrial and activities and investments in the MENA region. Let's be honest, making business or doing business in the MENA region is extremely tough and challenging. So let's not kid ourselves. However, this introduces an opportunity where many conglomerates or international companies who do not understand the region might shy away from investing in difficult markets. And as a group, we have a saying in the group that we always have affinity with very tough markets. Tough meaning political instability, legal, what have you. And time has proved to us that actually investing in these difficult markets has rewarded us. Of course, the vision has to be a long-term one, not a short term. The challenges, if you will, in a positive connotation, actually are political, of course, you all know. Instabilities, changes in the legal framework, changes in the economic laws, instability in the direction, lack of vision, unemployment, a young population, 50% of the Arab population, or the MENA in general, is below the age of 18, so this presents a challenge and an opportunity. The workforce has also challenges in some markets. You have to abide by a certain quota, but you cannot find qualified laborers, or in some markets we find the culture of shame, where you have more expatriates than the unemployment in that country. All of that, I think, is some characteristics of the region. Non-tariff barriers, bilateral trade issues, many things. However, I will tell you from experience that it has been very much rewarding. I think that there are still today a lot of potential. Today I walked in a bit late and I heard somebody talking about the services, and I think I agree that the region has a lot of potential in services, be it human, physical, health, education, training, banking, what have you, entertainment. Of course, tourism also presents a good opportunity. As a group, we are focused on the MENA region. The US operation is kind of a diversification, but we continue to be focused on the region, and I think we will see a lot of good results. We have to be patient, we have to be realistic, but I think working with local players as international investors is quite important, like our esteemed speaker mentioned earlier. Thank you.
Okay, excellent. Thank you so much. That's a really good starting point. I'd like to take a look at the global picture, and then we're going to zero in and focus more on specifics of the Middle East. But if I could perhaps start with Hossein, because I really wanted to get your sense, and I'd like everybody to respond to this as well, but I'll start with you, Hossein. When we look at the global economy, currently, if we look at Europe or the United Kingdom, Europe's just sunk into its longest recession since records began. The UK narrowly missed a triple-dip recession. Growth is anemic in even the strongest European countries like Germany, for example, and the United States. The recovery is very far from steady. When you look at all these factors, how much of an effect do you think that has on growth prospects or investment opportunities in the Middle East region? You talked about how one of the things you do is that you try to put together resources from the UK and match that up with your clients' needs from the MENA region. So in the current environment that we're witnessing in Europe, how much does that pose a challenge for you? Is the appetite for investing in the Middle East or financing projects there being affected by the economic conditions in the West?
Yes. Well, it is not completely isolated. The MENA region is not isolated. It's part of the world. It does have an effect. However, the resource-based economies and the fact of high prices for the natural resources, that does give an advantage. How to take advantage of this situation is about focusing on the sectors that are strength within the MENA region. Of course, the natural resource sector is very, very strong. And the demographics that David mentioned earlier represent a strength. Part of the recession that Europe is facing is the demographic challenge. The MENA region is on the opposite side of that. So you need to have the right workforce trained in the right way. That's a big challenge. It's easier said than done, but that's a very important part of that development. And the other thing is bringing the expertise from the Western countries and having the environment that welcomes the foreign investment. And a lot of what was discussed today touched on these important points.
So you're saying it does have an effect, but there are ways to work within that context.
Of course. Yes, exactly.
Well, I'm interested to hear perhaps also what Ahmed and Sulaiman have to think about that. Do you want to go ahead, Ahmed? Please, I'd like this to be a sort of free-flowing discussion, so feel free to jump in.
Well, I mean, maybe let me offer a perspective from our own business. I mean, we're in the shopping mall, retail, entertainment business, and looking at what's happening in Europe and the US in terms of the economic slowdown, it's actually having a positive impact on our business and along multiple lines. First, if you look at global retailers, global fashion brands around the world, they're facing clear saturation in their home markets, whether that home markets in the US and Europe. And what we're seeing over the years, and it's accelerating now, is that many global brands are looking for the Middle East as the next frontier for growth. And in fact, CB Richard Ellis, I believe they issued this annual survey of global retail cities, so cities that have the highest penetration of global brand representation in them over time. And actually, Dubai is number 2 right after London. So Dubai is ahead of Tokyo, Paris, Singapore in terms of global brand representation. But interestingly, Kuwait City and Riyadh are ranked, I believe, number 9 and number 11 respectively. So I think the demographic attractiveness of the region, coupled with the slowdown elsewhere, is driving many global companies to reshift their strategy and divert investments toward the Middle East. The other point that we're seeing is a matter of competitiveness. Certainly because of the slowdown in certain industries, hospitality, the entertainment industry, the level of reinvestment in Europe and the US has diminished over time as companies have had to deal with the natural sort of commercial realities in their home markets. In contrast, if you compare that to the air transport infrastructure, the airports, the airlines, the hotels, the shopping malls in the Middle East, the investment there has been significant over time. And as a result, the competitiveness of Dubai, Abu Dhabi, Doha as retail markets, as air transport hubs has actually increased over time. And we see that very much in our business, in the footfall into our shopping malls, and certainly in the sales densities. I would give you one statistic. Mall of the Emirates, which is our flagship asset, has been ranked among the top 5 most productive retail destinations in the world. That's quite outstanding. And it's a combination of the factors I've mentioned in my remarks.
What about you, Ghassan? You are also in the services industry. Do you see it as something you have to work around or something that you're benefiting from?
Well, let me answer you as follows. I think when we look at the MENA region, we have to understand that there are major differences in different countries within the region. Some countries are very rich with resources, energy, for example, and there are, I believe, the potential in downstream industries. And other countries are very rich in manpower and education, like Jordan, poor country in resources, but has a lot of manpower. If you look at sectors where there is added value, including services and IT, for example, IT has been growing at the average rate of 25% in Jordan. 75% of the content, of Arabic content, is done in Jordan, which is such a small country, which presents itself as a good hub for development, for outsourcing, and what have you. I think whatever the economies in the Western world are doing, I think the region will continue to be attractive. It's emerging, growing population. Some virgin markets, fortunately or unfortunately, because of wars or what have you. Again, I mentioned obstacles, which could be actually opportunity, and I emphasize on that. You also have something interesting, which is the Greater Arab Free Trade Area Agreement, where you have no quotas and no tariffs between Arab countries. Yes, we do have some non-tariff barriers, but in general, it is working and it's very useful. So I think when you look at the region, you need to look at it regionally and understanding at the same time the differences. I still believe, although I am predominantly in manufacturing, but we are in services, and I believe services, retail, I agree, are definitely present a good potential. The last point I want to mention is that we need to look at value added. We cannot just bring in materials from abroad and convert them in our part of the world and ship them back. I think we really need to look at value added, basically intellectual, local production and services.
Sulaiman, I wonder, in terms of the private equity sort of landscape, do you face any challenges in terms of financing when you're trying to do a deal? Is that being affected by the current situation here in Europe or the West?
Yes and no. It depends actually on the source of finance. Any Western banks have somewhat, shielded away from investing recently, but the local banks actually are quite cash rich, so they've been actually taking that gap. Leveraged finance has always been a problem in the Middle East. I think only in 2008, which we started getting actually a little bit more sophistication in leveraged finance side of the business. But by 2010, I think most of the Western banks have already pulled out from the region. Or is taking only very secure projects, government projects, and avoiding large corporates. Some cases it's different. I think in matter of time, we have raised actually quite significant bonds as well, and we're very successful. But I think if you look at more on the whole region, or taking a little bit of excessive risk, private equity risk, then you find them to have shielded away. I wanted to actually also shed a little bit more light on, not just on private equity, but on I'm more of a centrist, so I say it depends on the sector. I agree a little bit more with Mr. Hassan. There is an inflection point back in around 2005-06 when Saudi Arabia actually shifted from its dependence on the West for their oil basically oil, for a market for their oil business, and they were looking at Asia. And I think a lot of the GCC countries started following suit. And I think that was very, very important, though we always have been selling to Japan, but now they started looking at China specifically. And I think that shielded actually a lot of the resource-rich countries from the full impact of the crisis. Because actually China has been taking a lot of the gap that was created by the West. So it depends actually on the sector itself. And I could speak from Jazeera's steel perspective. It was interesting for us because the demand for steel products in the Middle East has always been quite stable and growing. However, when the Western markets actually started diminishing or decreasing, or the demand has been decreasing significantly over there, the two producing countries, which is China and Turkey, which were always focused on Europe, have started actually dumping into the Middle East. Because that's the only area left, even though it's small, that's actually growing. So it was actually very harmful for our local, basically our steel producer in Oman. It was very, very harmful for our business there. To a point where actually raw materials now, and for a country that's, and let's say it's still an oil country, considered an oil producing country, where we're getting raw materials or end products almost at the cost of raw materials. That becomes a crisis. But I think in the countries, now it's more of an interdependent world. So really whatever happens in the West will affect some other country, which will affect us. So really it's only for maybe resources like oil, where because the Asia has took all the demand, we were able to be stable. But I think if Asia wasn't there or slows down in the future, then we'll have a big problem.
I want to comment on that.
Please, of course, yes.
Suleiman, it's a very good point about the inflection point in the mid-2000s, moving more east. That really helped the region through the slowing economy in the West. People always ask, I'm from Saudi, and they tell me, what happens when oil runs out? The question is not what happens when oil runs out, it's what happens when we run out of customers. So the region focused a little bit more to find clients in China and that part of the world, and that really helped the region in this current down economic cycle.
Well, then I have to ask both of you, and please anyone else who'd like to jump in, are you at all concerned by slowing down of the Chinese economy? The growth is going to be, I think, the lowest in 13 years. In fact, it was, I believe, in the first quarter, 7.9%, a decrease on last year, and the forecast, I think Nomura just cut its forecast for Chinese growth this year. There's serious concerns about demand in China. Investment is going down. We have Japan going through a very tricky time as well. So is the growth sustainable in the BRICS and in the Asian economies that you are now perhaps sort of focusing on more than you were in the past? Is that a risk?
It is a risk, but remember we're talking about slowing growth and not a crash, like they say. The landing has been fairly soft for China, and China, of course, is a major indicator for all the Pan-Pacific economies. And there is also reasonable growth in other emerging markets that is...
Like where? Can you give us examples?
Indonesia.
Okay.
Although they have their own natural resources, but that's an economy that's very, positive. And one of the best economies in the world to invest still is Turkey. Turkey is very important for us in MENA. We in the group have moved MENA from Eastern Europe, and it became part of MENA, now called MENAT. As Turkey, since the mid-2000s also, have increased trade to the Middle East. And for the Middle East, we're looking to trade energy and other, produced goods with Turkey.
Okay, great. Well, I'd like to sort of shift focus slightly, and I wanted to ask a question to Ahmed, if that's okay. You talked about how you're exclusively a company that operates in the Middle East. You operate across, I believe it is 8 countries. Can you tell us then, in that case, you're not diverse in the sense of the sectors you pointed out, that you guys are focused on retail and entertainment in particular, but you are quite diverse in the regions or in the countries that you operate in. So how do you prioritize where to invest? Do you consider the GCC a homogenous group? Do you have a unified policy, or do you sort of have a targeted policy for each different country that you're in the GCC? And how does it differ from North African countries or countries that are going through transitions, such as Egypt, for example, where you also have, I understand, a number of shopping centers?
So, I mean, our business in shopping retail is very much a local business. So it's very hard to take a very broad view about the markets, whether I would argue even you can't take a broad view of the UAE. I mean, within the UAE in our business, you have to look at Dubai, Abu Dhabi, Al Ain, the Western region as very different markets with very different sort of consumer profile and consumer requirements that impact what we offer in these markets. Having said that, I think if for Majid Futtaim, the way we look at our geographic expansion has been clearly sort of affected by the Arab Spring in two ways. I think one, we're starting to take a broader view of our footprint. Prior to 2011, it was predominantly GCC, Egypt, that was 90% of our business. Following the Arab Spring, we're starting to gradually look at the opportunity to expand that footprint, and we've recently actually announced the expansion of our joint venture partnership with Carrefour into Kazakhstan, Azerbaijan, Georgia, Armenia, so former Soviet republics. So that's one impact. The other impact is that when we look at countries like Egypt, Saudi, Syria at the appropriate time, we look at these markets given the size of the middle class and given the growth opportunity that presents itself for retail, shopping, entertainment as long-term markets. Mm-hmm. And as such, our return expectations have had to be readjusted to treat these opportunities on a much longer time horizon. And maybe going back to a comment you made about ability to raise money, this is one of the big challenges. Our business is a very long-term business. And raising long-term money in the Middle East, although the banks are in very good position liquidity-wise, it's very easy, it's very difficult to raise long-term money in the Middle East. And in fact, companies like Majid Futtaim, we've had to tap the global capital markets for long-term capital to satisfy the changing profile of our business. So I guess one of the big challenges for companies like us and maybe others in the region is how can you get the right sort of funding at the right cost with the right sort of maturity to fund what is now very long-term investments. And at Majid Futtaim, we've taken a strategic decision that we want to be an investment-grade business. We're BBB by Fitch and S&P. We want to maintain that, and that sort of enforces, I have to say, a very good level of internal discipline about how we think about allocation and risk going forward.
Well, then I must turn to Ghassan at this stage, because you really emphasized how the economic challenges that can be presented in a country like Jordan, which some could argue is going through an economic transition, actually, in your opinion, the obstacles are actually opportunities. You stress that. And then that really ties into what Ahmed was saying about how currently the Arab Spring has made them rethink their strategies and look at things in a much long-term perspective. You're a family business. Firstly, how do you have to adjust your strategy to look more long-term? And can you maybe elaborate on how a company like yourself is operating in a pretty challenging environment? How can you see that as an opportunity? What are the opportunities? And for someone who's considering coming into a country like Jordan, who maybe doesn't have the local knowledge and has the appetite for risk that you already have, what can you say to them to potentially overcome some of the glaring risks that they see that could be a hindrance?
By the way, these are 10 questions. All right. I'll give you an example, a story. In the late 60s, early 70s, the foreign minister of Jordan made a political statement which caused the borders between Jordan and Saudi, Jordan and Syria to close. At the time, I was not, of course, in the business, but my father had to decide to open shop in many countries. So he started expanding into these markets. And when we say that we are regional but local players, that really served us. In our main business, which is pulp and paper, you cannot really ship a lot of paper, the volumetric, if you will. So basically, we had to open a shop in many markets, which served us very well as a local player and close to the consumer. Now, three things, I think. We continue to nag and lobby with the governments to change. Now, we understand the markets very well. We adhere to highest values and the code of ethics, which means that we cannot bribe, we cannot circumvent the corruption. However, but we have to work very realistically within the frameworks. Many players shy away, international ones. So this gives us an advantage to be the local player. Second, we invested a lot in distribution. And this is quite difficult to build. So basically, it gave us an advantage. The Arab Spring, with all the instabilities that took place, we noticed that we grew at highest rates ever. Basically, we realized that we are not in a very sexy industry, which is the pulp and paper, diapers, what have you, but they are defensive industries, which means that consumers, with the growing population of the Arab world, actually have to use. In fact, more of their income now became towards these items than other luxury goods. Of course, we are in retail, we are in automotive. It was affected, but as a diversified group, we managed quite well. My advice to any international player is, and I think it was mentioned earlier, that you really need to work with a local player. First of all, it economically serves the region. Second, the learning curve could be very harmful. And the selection of a local player also is tricky. Our partner in Yemen, and I'm not ashamed to say it, at gunpoint kicked our 12 Jordanian managers from our plant in Yemen since 1994. Talking about judicial environment and legal framework, till today, we were not able to take our rights back. But guess what? The Arab Spring brought a new environment in Yemen, and just 6 months ago, we were able to bring our products back into the market, and now we are very hopeful that we'll be able to get back our rights. So I think even the Arab Spring brings with it some good things to the table. I gave Yemen as an example, but I could really cite examples in every Arab country. I think the non-tariff barriers are definitely an obstacle, because even us, with many plants in the region, we have big plants, one for the Levant in Jordan, one in Egypt for North Africa, and one in Saudi for the Gulf, but we have plants all over. But these plants produce products for all the region. We cannot afford to have a huge, fully automatic, state-of-the-art lines in every single market. So basically, we need to have economic integration in every sense. Labor free movement, the added value segment, the cumulative added value. A lot of these things are not really active, and we need to move forward. The last point I want to mention, which you have alluded to, and I mentioned it earlier, is the long term. I think that I agree that in the region, hit and run and quick buck really doesn't work. In general, it doesn't. So I believe that long term, in Sudan, for example, we are there, we've been there for 6 years. We just started making profits a year ago, but I believe once Sudan, and hopefully it's a matter of time, opens up, we are already the market leader, and we will reap the benefit. So I think, again, it's not just one answer. Every market has a way. You have to be dynamic. As a family business, we are institutional. We separated management from ownership. So we have a clear vision, strategy. We want to be number one and number two in every category, in every Arab market or MENA market. We are in Iran. We're not in Turkey and Israel. We are in the West Bank. So I think that, it is promising, but we have to be patient and realistic as well.
Well, then perhaps I could also ask you about the fact that you are a family company as opposed to a regional conglomerate or a publicly listed company. Does that present an added challenge for you? Or are you happy with that structure? What kind of elements does that throw into the mix?
Empirically speaking, family businesses fared much better than public companies in crisis, because of the agility, the ease of work, provided you have corporate governance and family protocol very strict in place, so that the family, if any feud in the family, does not affect the business. And we have the Chinese wall there. Yes, of course, a challenge. Raising funds, for example, for a family business is much more difficult than public, although we did issue few bonds here and there in different groups and holdings in the group because of the long history, good cash flow, what have you, but it's a challenge, definitely. The challenge always remains, basically, is to protect the business from the family. Not my family, but any family. Because if you look at the statistics, we know that 3% survive into fourth generation. I am second, my two sons are here, third generation, so it's a challenge. But, discipline, long-term, real governance on the family side, on the business, are quite important.
Excellent. Well, I hope that everybody is listening and paying attention, because we're going to open it up for questions. I want to make sure we leave enough time for that. But I'd like to move on to Hussam, because I know that you can't divulge details or specifics about who your clients are and what they're doing with their money. But if you could just perhaps shed some light for us on the areas that they are interested in. When they come to you, what are they telling you? What are they asking you for?
The two countries of growth that people are looking to invest in MENA are Saudi and UAE. I think David's presentation showed it. There was not only, they are high in terms of nominal GDP, they have very high growth rate. Oman, incidentally, is another driver. We focus a lot on the GCC. Abulia, we don't do enough work in Jordan.
I think you're closing down in Jordan, aren't you?
Retail.
Retail, yeah. We dealt with them since 1952.
The other very important country for us, and as I mentioned earlier, we as a group, particularly in the private bank, have moved Turkey as part of the Middle East and North Africa. Turkey trade between Turkey and the rest of MENA went from, I think, 12 billion annually to 50 billion recently, and it is growing very, very rapidly. Our clients from all parts of the region are looking towards Turkey increasingly for investment in various sectors. We repeat industries that are dependent on demographics because of the issues discussed, people focus on a lot.
Why is that? Why is everybody, I keep hearing Turkey over and over again. Can you just give us a little bit more specific? Why now as well? It's always been there.
It's always been there, but what happened recently is they've really changed the governance of the country and institutionalized more solid rule of law. And that has it's given everybody a lot more confidence to go and invest in Turkey. I think there are many ways to answer this question, but I think the fundamental issue is rule of law, which gave investors the confidence to go. They have other benefits, the central location, positive demographics again, and a solid education system that has, given a solid workforce that people could go in there and take advantage of.
And are your clients interested in any European opportunities? Is there a kind of a vice versa kind of flow of investments, or are they? Because I know that, for example, the infrastructure sector in the UK and in Europe has always been attractive to Middle East investors. Is it still attractive? We know Britain wants to attract Arab investors to build its infrastructure. Are they interested in coming to that sector?
In Europe, there is a big demand for real estate. European real estate, it represents a different and diversified currency and stability. I don't claim to have a broad view of what I see. We have, not too many clients, but the clients we have like to focus in Europe on real estate. UK is number one, and Germany comes in second.
Okay, excellent. If I could just move on then to Sulaiman. We haven't heard from you in a while, so I hope you're ready to be grilled. But no, we wanted to understand a little bit more about what are some of the emerging trends that you're seeing in private equity in particular, and venture capital, which is, I would imagine, would you say it's fair to say it's a relatively new area in terms of venture capital in the region? Can you tell us a little bit about what are the challenges you face? I know from my personal reporting that a lot of private equity firms in the MENA region are quite interested in Africa. Is that the case for you? Where do you see opportunities, and what are the trends?
I think I'll start just with a brief description of what's happening in private equity, at least MENA-focused private equity. To tell you the truth, it reminds me very much, I started actually working in, of my first career was actually catering to venture capital in Europe. And it's very, very similar to the period of around 2000. A lot of funds were established back in around 2000 and 99, which is and larger funds in Europe, which were depending on the successes they had previously. And we had a very good run at that time in the 1990s for venture capital in Europe. However, 2000, there's a crash, at least on the European side. Not the US actually came a little bit earlier, 2001, and the IPO window almost completely shut. So what happened really is like you have huge funds which are, have a lot of difficulty of actually investing, and very soon, I think it took them more than 3-4 years to get back into the investing mode. And this is the same thing that happened in the Middle East. A lot of the funds in the Middle East that were established later years, 2007, 2008. A lot of them depended on some successes they had previously. And what we have is now a case where there's significant large funds. There's a lot of cash in the funds, but most of them are actually ending their investment periods without investing, and that becomes a huge problem. The problem is, the other thing, the IPO window is completely shut. So in terms of exit, it was very, very difficult. What's happening now, it's again another small inflection point, or at least the first signs of an inflection point, where capital markets have started to catch up. There's growth and from the beginning of this year. If I compare 2010 to 2012, 2010 there was 8 IPOs all across the Middle East. In 2012, there were 7 in Saudi Arabia alone. So I think we're reaching a point where we're back into the investing mode. There's exits. So what I expected from private equity that there will be significant exits in the next few years. And hopefully with that, more investments as well. The problem actually, even during that period, which was extremely dry in terms of investment, valuations really didn't drop much, unfortunately. So I think it's very, very similar. A good analogy will be the venture capital in Europe in 2000. For venture capital in the Middle East, it's a new area, and I think it's a new trend. The problem with the Middle East, there's significant demand for it, and now I think government finally realize the importance of venture capital. I think from the Arab Springs, a lot actually is now being dedicated. A lot of governments are dedicating resources towards building SMEs and helping businesses grow. The good signs we see is that governments, and like we could see, like Saudi has already worked with actually some private equity firms to establish venture capital, platforms.
Seed funding?
Yeah, it's seed funding, but it's more of platforms. We're saying the same thing in Jordan, which was actually a bit earlier of everyone else. I think, and that's why actually there's actually better signs of venture capital in Jordan than compared to the other parts of the Middle East. UAE is also developing actually quite interesting area for venture capital. But I think in the next few years, we're going to see much more money going towards that than private equity, at least for the next 2-3 years. The problem with venture capital, there's a lot of things that have to change. Psychologically, the Middle East does not accept failure. For venture capital to actually grow anywhere, there has to be a better acceptance of failure. And I think the other thing, it's the whole, you need them all together. We need another Silicon Valley, and everyone's trying to do, whether it's in Jordan, whether it's in Dubai, and I think it's time that we unify and to choose one area and put all our investments there, because they would benefit from interdependence with each other.
Is there an average rate of success versus failure in venture capital? I've heard varying percentages. I wonder what your experience is in terms of the high volume of failures versus the lower.
We have been focused more on private equity. So to tell you the truth, we're establishing our venture capital fund now. In Europe, the US actually have, US and Europe are actually almost reaching to the same levels. Middle East, I think because of the non-acceptance of failure and the difficulty that even the startups that were created, a lot of them actually were able to survive because they were based on really strong foundations just to make sure that they don't fail.
Yeah. Well, I think it's really interesting that you talk about the demand that's increasing for venture capital. And if we just look back to the earlier presentation from Mr. Tousa, he talked about how 11% of graduates wanted to be self-employed and how there was this youth bulge that is a phenomenon across the region. So youth bulge plus wanting to be self-employed, does that not kind of pose the question, would it not be the obvious route for some people to go down the venture capital route and start their own businesses and also form small and medium enterprises, which we hear time and time again from everybody is the key to growth in the Middle East? So where does the role of venture capital in creating jobs for the unemployed, helping them create their own businesses, and also creating a vibrant private sector through SMEs?
I think the government is starting to realize that, and that's why most of them are actually sponsoring these platforms. The other thing is actually development technology as well. And something like any mobile apps or game development for for mobiles has been actually growing significantly in the West. And finally, the Middle East is catching up. What it actually did is actually reduced or made it much easier to distribute what you produce. And finally, we're seeing actually a lot of software development firms that are popping out in Saudi, actually in Jordan predominantly, Egypt, and Saudi now. This is becoming very, very interesting. All of them are led by their own nationalities. What's also very interesting is we're actually noticing Western venture capital funds now investing in the venture capital space in the Middle East. Electronic Arts, one of the leaders in the game development and distribution, have already just invested in Jordan, and a software developer in Jordan. There's a lot actually that are looking to now Saudi Arabia as well. The other thing that you have to keep in mind is the population as well. There's a lot of, in terms of market, it's an easy way to capture a large part of the market when they have, in terms of demography in the Middle East, there's many numbers, but the numbers I'm going to use is around 60% of the population is under the age of 35. A lot of them are unemployed. There's nothing better to do. Just play with your mobile or use the internet. And I think if you're able to tap into this market, it's a huge, huge market.
I mean, just to offer a perspective from a different view as well. I mean, Suleiman says, the acceptance of failure is an issue, and I think that's one way of characterizing it. But the cost of failure is actually huge. If you're an SME business anywhere in the region and you get a bounce check, that's a one-way ticket to jail. And unless that changes, that 8% of people who are graduating from school and are looking to start up their own business, the risk of failure, not just the risk reputationally or to your career, but the risk of actually being tagged a criminal is huge. And if that doesn't change, it's going to be very difficult for entrepreneurs, it's going to be very difficult for SMEs to find the right funding and to create the success stories that are required for more and more people to follow suit and get more entrepreneurial and sort of change their lifelong dream of becoming a government employee. We have a small sort of finance company in the UAE and in Egypt, and that's very tricky. It's very, very tricky for people to sort of accept that if you default on a loan and you're a small business, that the remedies go to debtor's jail.
So you're saying that there needs to be a policy shift or a rethinking of the way these kind of economic failures are dealt with on a legal level, on a policy
There has to
level?
be a significant revision. There has to be an overhaul of the entire sort of bankruptcy code across the region.
Hassan, you're nodding your head.
Yeah, I'm saying that to answer you both, we need the bankruptcy law, which Jordan has been playing with it for the last 2-3 years, and for some reason we're not going ahead with it. Second, the issue of funding, because many banks today do not lend to new startups, forget the angel investors or the venture capital or what have you, unless you pledge 110% of a family asset to, and this cannot work really for startups. And you end up, even if legally you are protected, you end up ruining your reputation. Nobody will do business with you. You will affect the reputation of the family. You know how the Arab world works. So I think, to answer you, it has to be comprehensively.
Okay, excellent.
I want to comment on the survey that was represented in the pie. It does show, part of the problem we have in that the aspiration of these youth, 34% want government jobs. That is a major part of the problem. It's a big portion of the population that wants to go into government job because the growth is seen as coming from the government. But government is very limited in how much it can spur growth. Unless we do something, and I don't have an answer. But
Can I say something?
I wanted to say that we want more people and families like Mr. Nukul, who represent 11% on the chart. Unless that moves bigger, and we need these youth need heroes, and Mr. Nukul is one of these heroes, to aspire to grow the private sector. If that doesn't happen, it's going to be very difficult to move from the situation we are.
Hussam, I will mention, which was not mentioned today, and maybe in your presentation, sir, this morning you did mention before I came in, the issue, the problem, and the challenge of education in the Middle East. We today in Jordan, for example, we graduate 60,000, 70,000 graduates every year, but I sit on the board of a private school and a public university. The quality of education really is a challenge. And this is part of it. Why in Jordan, I think in Jordan the ratio is much higher, is because it's a secure job, you cannot be fired, no accountability, rentiership, if you will. And this needs to change. And this, if we start changing education, we will start changing the mindset. Success stories are definitely important. Again, any issue, any challenge has to be looked upon comprehensively. But the key is education.
And also the fact that I understand a lot of the people coming into the labor force don't actually have the skills that are best suited to the jobs that are available. So that's also, they're not kind of commensurate with what is needed.
Absolutely.
That's not only in MENA, it is in MENA, but even in the West, by the way, universities, and I know we're sponsored by a graduate program, but universities aren't necessarily giving people who are coming into the workforce the best skills needed for the economies. Much lesser extent in the West, but a greater extent in MENA.
I just want to share something, maybe will shock some of you. I speak sometimes in career days in private schools, and I tell the graduates or the young students that if at Nucco Group I want to interview someone, I will put 80% emphasis on the soft skills and 20% on the academic issue. Because the soft skills are something that we really need in the workplace. If you bring a top-notch student, he or she can actually do whatever he wants and cannot deal with others, cannot communicate, does not have pride in what she or he does. All of that then the degree in my mind is worthless. And this is something in our family foundation, for example, are working on, is to instill some of the soft skills, the skills of life, if you will, in our young graduates. And this is key and a challenge, definitely.
You may have been watching the UK Apprentice. I think it may apply to a lot of the contestants, for those of you who watch that show. I'd like to turn to the audience now. I'm sure you have lots of questions. I hope we have enough time to get to them all. I see a hand up in the front here. If we could get a microphone to the gentleman in the table in the second row. Thank you. Please, if you could just identify yourself briefly, and if you have your question directed to a particular person on the panel, do let us know.
Sure, thank you. Ayman Adher, Global IMC. 2 points. One, I want to thank Hassan for bringing the value-added services that is opportunity for all our region, and for highlighting the Jordanian ICT sector as an example of these buckets in our economy that we can do it. I had the honor to develop the 5 years ICT strategy for Jordan, 2007, after REACH, because there were multiple, REACH 1, REACH 2. And worked closely with Intaj in empowering the private sector to play a role in developing the strategy and implementing it as well. So they grow from $300 million in 2007 into $1.4 billion at the end of 2012. So it's again, the future for us is knowledge economy. And what really fuels this is the 300 million consumers. And that takes me to my next point, which is 3 of the organizations we have in the panel, with the exception of HSBC, which is a global. There are 3 homegrown regional success story of private sector companies that managed to have sustainable growth, even the tough times. My question is, how can we transform this sustainable growth into inclusive growth? And what I mean here, I'm not talking about social responsibilities or philanthropy, but actually things like localizing your supply chain. And maybe that's an example for Magid Al-Futain Ahmad, if he can comment, what percentage of his supply chain has been localized in the economy, as well as the other gentlemen. So that's really what would transform these elite, in the top of the pyramids, private sector, family-owned companies into trickling down their sustainable growth into inclusive growth. Thank you very much.
Ahmed, do you want to take this one?
Well, I think, it's a good question, and thank you for raising that. But I also have to be completely frank with you. We're not government, and we're not we don't have the policy levers to affect that trickle-down effect you refer to. But what we can do and what we are doing at Magid Al-Futain, of course, we have the Magid Al-Futain Charity Foundation, and we're focusing on the empowerment of kids and women, looking to empower them to lead independent and fulfilling careers. We do have a very comprehensive CSR program. But to your point about how can we have more inclusive growth, it's actually in our self-interest to have a localized supply chain. It's in our self-interest to have a very efficient or energy-efficient building. In fact, the largest shopping mall we developed was the first LEED certified shopping center anywhere in Middle East, North Africa, and probably parts of Asia. So we are doing bits and pieces, but at the end of the day, the major levers around inclusion and around, if you want to call it social development and the development of the social infrastructure, rests with the government. And we cannot pretend that Magid Al-Futain or the private sector, no matter how big and no matter how well-intentioned, can really take the lead on that entirely. We have a role to play, and I hope we can play that role. But hopefully, with democratic transition in countries like Egypt, my country, would have more accountable government, and hopefully less populist in policy making, and can really affect the change that is demanded by the 82 million people living in Egypt today.
If anybody wants to comment, please feel free to, or else I think there's a question towards the back. There's a gentleman in the lavender shirt, yes.
Yes, Marcos Papadopoulos, Z2O Technologies. I have made a few notes. I'll be very quick. First of all, non-acceptance of failure. I think Mr. Ismail has already answered the question that unless failure is decriminalized in the Middle East, there is no real incentive for the young entrepreneurs to start their own business. Mm-hmm. But it goes even further, I think, than just decriminalizing, instilling into a young entrepreneur that failure is okay, and provided you don't lose faith in what you want to do. I mean, you look at all the big entrepreneurs; they've had their failures before they got there. The other point is from Mr. Nukul about soft skills versus academic. I just want to say that if we look at Steve Jobs and Bill Gates, they were both college dropouts, and yet their combined work has changed our world to extents that we didn't even suspect 30 or 40 years ago. I mean, when I used to say to my kids, we had our first TV at home when I was 8, they would look at me and say, what did you do, Dad? So, I mean, this is not to mention all the technological advances. The other point is about the oil and the main oil resource in the Middle East. And I heard the panel being or raising the concerns about the drop in growth in China. Well, obviously it is worrying, but China will come back. The main concern, I think, should be what is happening in the United States. Already the United States last year have increased their oil production by 19% due to the oil shale technology. And they are due to be self-sufficient within the next 5 to 10 years. Now, this is much more concerning because at the moment and for the foreseeable future, the US are really going to be the major consumer of oil and gas. And if the Middle East loses, I mean, at the moment they are still importing 72% of their oil from the Middle East. Now, this is much more concerning than a slowdown of the Chinese economy. And finally, Africa, I think, should be the place where the Middle East should be looking for to develop new resources to replace the oil when either it runs short or there are not enough markets and not enough revenues will be generated. That's it.
Does anybody want to respond to that? I think the raising of the issue of, if we're talking about diversifying economies, obviously a number of oil-producing countries are diversifying their economies away from fossil fuels. To what extent does that present a challenge, an opportunity, a risk? And to what extent is Africa also a new frontier? You're already operating in Africa yourselves. You mentioned in Sudan. Does anybody have any thoughts they'd like to respond?
I mean, when you do look at Africa, I will not attempt to answer the question, what is the impact of an energy self-sufficient US? I don't think I can sort of...
We can have a special conference just about
that.
Yeah,
that's, but I think on Africa, I mean, you can't look at Africa at one single market as well. I mean, I mentioned in my earlier remarks that we are rethinking our footprint post the Arab Spring and reconsidering other territories. And of course, Africa is a natural market to reconsider. But you cannot sort of consider Africa as one market. And I think even within Africa, there are now the emergence of regional blocks. You have in East Africa, there is certainly a lot of free trade agreements that are coming on the line to create a larger and more accessible market. Certainly in West Africa, you have Nigeria and Angola that are significant markets. And certainly big opportunities, but also big risks. The other thing to consider is Africa has been on the radar screen for many global companies. We're not the only, I mean, the Middle Eastern companies and Arab companies.
The Chinese are already way ahead.
Are not the only one in the game. It is a fairly competitive market. It sounds or it feels similar to maybe India 15 or 20 years ago, and 15, 20 years later, all the major multinational companies have very strong and growing presence or big interest in India. India, of course, the retail market remains sort of closed for foreign investors. One day it's closed, one day it's open. But certainly Africa is a big opportunity, but you need to look at it at a more granular level, south, east versus west.
I do want to comment about shale oil. It's talked about a lot in the media. But I believe in efficiency of markets, and the information about shale oil is available in the market, and the price of oil has softened a bit, but hasn't come down. And the reasons for that is that shale oil in the US, they might be self-sufficient in 2020, but it comes with its own difficulties, including environmental issues that might...
and also it's very costly to extract it.
It is extremely costly. Why is the market not softened more? Because there are a couple of factors. In the emerging economies, China, Indonesia, I mentioned two of them, per capita consumption of energy is very low because it's not urbanized yet. The more urbanization in these emerging markets come online, the more energy demand increases. Excuse me. The problem in the Middle East is not shale oil, and there will be demand for oil. The problem in MENA is that the use of energy is so high per capita that it is infringing upon countries like Saudi Arabia's ability to export it. The country, Saudi Arabia and UAE, depend very heavily on desalination, which is a very energy-intensive process. Excuse me. Saudi Arabia, for example, is the third per capita user of water in the world, partly because the water and electricity are subsidized and people don't regulate that. But unless that mentality changes, our country's ability to export oil is going to be the greatest challenge for us. It's not going to be shale oil or external factors.
The distortion of markets create that. In Jordan, for example, the energy, we are non-oil producing country, so we subsidize all the energy, and this has blurred the market. The minute the government started removing subsidies, today as we speak, there are major projects in renewables. The reason is because only recently the government has started removing subsidies. Before we get blinded. And this could be a very important and interesting long-term investment opportunity in the MENA, of course in some markets, not all. The other point I just want to mention from previous questions is recycling and waste management. I think that these are also interesting projects that one could look at. We as a group have been looking at it. We don't have the expertise. We've been talking to many companies about it. But I think the region does not have enough codes to actually force you to be efficient in use of resources.
Okay, excellent. Well, perhaps another question. We've got quite a few hands. Should we go all the way to the back? Someone's raising their hand. I can't quite see their face. Is it a... Yes, lady. You. Yes, a lady in the back. Thank you. Could you just identify yourself, please?
Hi, yes, I'm Dunya Amin. I run a networking society for young Iraqi students and young Iraqi professionals called Iraqi Professionals UK. My question is, someone mentioned earlier about entrepreneurs who have succeeded, for instance, Bill Gates and Jobs in the Apple company. And I noted that the panel want to encourage entrepreneurship in the Middle East. how does one encourage entrepreneurship where the Middle East is rampant with corruption, both at a political and private level?
Of course, please.
It's a good question. My answer to you is as follows. You have two choices. One is to admit and accept that there are obstacles, challenges, including corruption, and give up and don't embark on any activity, or face it and make the best out of it and take your risk in life and make a difference. I think it would have been easy for us not to say that we can produce paper in Jordan when we started. We didn't have water, woods, or nothing, and today we export to all European countries. So I think we need to have the positive mindset. When there is a will, there is a way. It's not what you do, it's how you do it. I don't want to boast, but I will tell you, for example, I understand your point and I feel with it. I'm working with two youngsters on two different projects. One is a football club, and the other is a gym. But my idea is not only to have one football field and one football academy and one gym, is to have a chain. These individuals are top-notch, they're young, they're full of energy, but they don't have the means and they know how to, if you will, steer through the bureaucracy. I don't want to say corruption. With all my contacts in Jordan, I have been still waiting for the permit for the two projects for 6 months. And I will not give up. And I will not bribe. It's against our policy, against our ethics, against our values. But you know what? Come in 6 months, I promise you will have a football club, and this youngster is a partner for his sweat equity, and he will be running this club as well as a gym, and we'll go regional in the gym, hopefully. So what I'm trying to say, yes, there are realities on the ground, but we really have to overcome them. We cannot just accept giving in so quickly.
All right, excellent. Getting a round of applause for that.
I think that answer tells everything. The attitude. Frustration is a partner. If we're working in the Middle East, you need to live with it, and that attitude is what we need.
Okay, excellent. There's a gentleman on the edge of the table. Omar, please go ahead.
Good morning. Thanks, Karina. I'm Omar Badour from the Arab British Chamber of Commerce. Before I start, I just want to mention our relation with HSBC is very important, and we value the relation, and we are very proud of it. But Hussam, my point is the word you just used, Minat, the T in the end. This is very worrying and very scary, and our role here is to promote the SMEs, small and medium-sized companies in the Arab world, small and medium-sized companies who are struggling at the moment. So bringing Turkey to the table, I think this is very scary. And we hope this is, because I've heard this Minat 3 or 4 times in the past 3 months, and I hope this is not the start of something bigger coming, but it's coming from HSBC, so it's going fast. So I think what we need to do is to think of the small and medium-sized companies. And my point here, bringing Turkey to the MENA. It's not the right solution. It's not the right way to go to the Middle East and the MENA countries. Turkey, they can benefit from their location, from their relation with Europe. So I hope that the Middle East government or the MENA government do something before in 10 years' time. We're not going to see the T at the beginning of the MENA. Now it's at the end. Hopefully there is no hidden agenda. Thank you.
Thank you for that question, but a bank cannot bring a country to a region or not. In the region we occupy, Turkey has looked more to the east, like I mentioned earlier, in its trade, and the MENA countries have exchanged that trade. If you look at MENA, there are geography is very, very important, and it is the lasting tie between countries. There is Turkey, Egypt are two major populations, and their integration in the region, goes up and down, but they will always be major players, I think. Iraq is also another country that has water resources, and a large population relative to the GCC. These are all players that, due to political factors, go up and down in terms of their influence in the trade relationship. But I think those ties are long-standing, and it's not up to a bank or anybody else to change that.
We have time for maybe 2 or 3 more. Shall we go also, let's go all the way to the back to the gentleman with the yellow tie.
just to follow up on Omar's comment about Turkey, instead of actually being scared of Turkey, let's try to learn from the lessons of Turkey. I mean, Turkey has done great in terms of, opening up, also in terms of technology. The question is, why wouldn't Middle East actually learn from Turkey? Why not become another Silicon Valley? Or, given that we have all the energy resources, Turkey doesn't have any energy resources. They're actually opening up to Kurdistan now because of energy, because they have a lack of it. So given that we have such a hydrocarbon-intensive economy, why don't we actually do something with it useful, like what Turkey is doing in terms of technology?
Could you just also say your name and where you're from, please?
My name is Raji Kuri.
I'd like to answer that. Yes, right? Let's not be scared of Turkey. It's a partner for MENA.
Okay. Shall we move on? More questions? Sir, in the front here.
Hi. Suleiman just mentioned about dried IPO market in Middle East. I have a question, like, is it about the lack of appetite for equity investment, or is it lack of opportunity? Based on my past experience when I used to work in Dubai, it's like investors will like to invest in the growing hospitality sector, airlines, but what they get to invest is struggling insurance companies and construction sector. So I would like to have your comment, and even like, because we always used to talk that if Mazid Al Fatun comes to the market, everybody would like to invest in equities, but we never get to invest in companies like Mazid Al Fatun. So what do you think about that?
I think this is one for you, Sulaiman.
I think the interest has always been there. Several issues happened. Basically the crash, and in several markets. The predominant one was actually in the real estate market in Dubai, but then if you look at even other markets as well, there was some fears, initial fears, which I think now they're starting to turn around. The other important thing that actually happened at that time as well was, if you look at the countries, the regulatory framework has changed and made it a little bit more difficult for IPOs, and they're also going to their own learning curves. When I mean this is and if you look at the CMA in Saudi, the rules for listing has been changed several times around. The UAE is the same thing. Kuwait is probably one of the worst case scenarios, where we had a very vibrant IPO market even up to 2008. I think in 2006 they had close to around 12 or 13 IPOs just in Kuwait alone. Once they actually once the new capital markets law came by, I think there's only one since then. So there is actually a lot of also regulatory issues that's happening as well. It's making it more and more difficult. Why people invest in certain industries versus others? I think I always have this question for why we do not invest in the insurance industry in the Middle East. If you look at the insurance industry in the Middle East specifically, it probably has the lowest beta, and weirdly enough, and actually in some cases, in some countries, has a negative, really negative correlation with what's happening in the market. So, and a lot of the insurance companies in the Middle East actually are very protected as well, because all the national industries are going through only local insurance companies. So it is actually quite defensive. But for some reason, I think the insurance companies themselves have been very dependent on that and have not really grown. And I still look at the insurance industry in Kuwait, which is the first in the Middle East. There's not really any innovation in that industry, except maybe the last 1 year. Something as simple as medical insurance have only been introduced like the last 4 years in Kuwait, which is one of the oldest insurance markets, at least in the GCC. So I think that's the problem. Certain industries have been very reliant on the government and really not looking at any other areas of growth. I think very interesting is actually a speaker who's going to come soon, Mr. Marwan Budeh, because he's also in an industry where it was mostly government controlled airlines, and he's introduced the first private airline company in Kuwait specifically, and he's also a great example of an entrepreneur who really faced up to the government and the government challenges and their resources and beat them in their own game. So I think that's a lot of the questions on entrepreneurship maybe it could be asked with Mr. Marwan when he's up here. Well, I think it's a lot of them have just relied on the government. and they really didn't develop. They're protected. A lot of them are owned by old families, and they're not changing anything. And actually, in Kuwait as a case, it's almost it's a hereditary position to be a board member in these companies. So the son goes to the following son and just continues on, and nothing really changes.
Do we have any more questions? Shall we go, the person in the sweater in the corner and the glasses on the edge over there? And then I think, can I take, just so that we can save time, can we take maybe two questions? Or maybe three? Okay, there's three more people. How many people do we have? Let's take like three more questions. The gentleman with the glasses and the lady behind him. Can you all ask your questions back to back, and then we'll get the panel to wrap up.
Thank you. Zido Kredwan, MBA student.
So can you speak up a bit and maybe stand, please? Thank you.
Hi, Zido Kredwan, MBA student. My question is regarding the Islamic financial system. How do you think that will improve or drive the business forward in terms of creating new and small and medium enterprises? And how do you see that happening in North Africa, where there's like a lot of corruption and it's quite closed in terms of investments to foreign companies? Thank you.
Okay, the gentleman in the glasses, we'll take your question too.
My name is Dr. Kadam Shaba of MECI Limited. We are involved in academia and also in business consultancy. I would like some comments from the respected panel about some unflattering remarks regarding the quality of graduates in the MENA region. That's probably a major problem which has to be dealt with by business organizations, business people. Can I put forward the following concept? You see, in the developed world, it is quite possible for employers' organizations to set up a new educational institutions. One example I am familiar with very much is the CIRAM business school in France. So why is it not possible for the employers' organizations in the MENA region to take the initiative to become proactive in this area, the area of education, and set up educational institutions, including business schools, which are designed in terms of the quality, the curriculum, and all that, to suit their purposes. And at the same time, as we have heard, there is the capital that is available through venture capital institutions which can finance that kind of projects. And I would very much like to hear any comments from the panel about that kind of approach, instead of depending on the state or other bodies like Western universities to provide education and to provide graduates for businesses in the MENA region. Why is it not possible for the employers themselves to take the initiative and set up new institutions which are designed to cater for their own needs at the quality that they require?
Thank you. Okay, let's just take one quick one.
My name is Amal Daher. I'm an MBA here at LBS. I just have a question about research and development in the region, because you have said SME more like a lot of times throughout the day. And SME, but in what industry specifically? Because today, if we're just going to give funds left, right, and center, it's all going to go to services. We know that. That's what the Middle Easterns are good at. But we cannot, like, all of our industries today are importers. Like the region, the way I see the Middle East growing in the next few years is to increase export and to diversify away from exporting natural resources, specifically oil. And to do that, you need some sort of research and development infrastructure. What has been done in that field, and where do you think the Middle East is best positioned to compete in globally, because you have so much competition from Asia, from the West, etc.
Okay, so just to quickly highlight what we've been asked here, what is the role of Islamic finance in driving SMEs, particularly in North Africa? Should the private sector be responsible for filling the skills gap and providing the education, or should that be government's role? Does the private sector have a role to play in that area? And what is the role of research and development? What infrastructure is in place? What is taking place on that front to make the MENA region more competitive?
I'll take a stab at the first question. For HSBC, we have a brand called Amana, and that is the arm we use for Sharia-compliant products. We're a big believer in this. We have focused our resources in the Middle East and the Far East, and Malaysia and Dubai particularly. That's where our Amana expertise lies. We believe that there is a lot of growth in those sectors, in those regions. More fundamentally, and this is my own personal view, Islamic finance is about using equity versus debt to grow companies. So from that point of view, venture capital, if people want to put their investment in Sharia-compliant products, venture capital is a very good way. So that bodes very well for early-stage financing. However, we still have to face all the obstacles we talked about earlier. That doesn't change that. But fundamentally, Sharia-compliant investing with this focus on the equity side is very, very good if we can overcome the obstacles we discussed earlier.
Hassan?
I will take the second question regarding education. Let me say the following. I'll talk about Jordan just as an example because I'm involved in education in Jordan. The law does not allow you to start a new university. It's very, very tough. And I was, at one point in time, for 4 years, a member of the Higher Council of Education in Jordan. And guess what? For 4 years, 5 of us from the private sector and the rest were from academia were not able to do anything because of the resistance to any new ideas. I also was the head of the founding committee of the Jordan German University. I became the vice chairman of the board of trustees, and now I'm a board member of trustees of one of the public universities. We have many challenges from the laws. And talking about reform, the Arab Spring, the more we want to please the street, the more education will suffer. All the laws that have been passed during the last 2 years, at least in Jordan, are in terms of education, are counterproductive, are getting us back. They want quantity, not quality, because they want to take people away from the streets at low grades. Please come into the college at least. And now guess what in Jordan? We have fights, including armed fights in many campuses. And the reason is because of the whole ethos of education. We have private universities for profit, and the quality is below any acceptable limit. Because in my mind, I stand to be corrected from my humble experience, higher education and profits do not come together, to be very honest with you. In the private schools, the basic education is the opposite. I'm also a member of the board of trustees of private school, not for profit, of course, but private. The difference between the quality of that and the public schools is enormous, and this creating a bridge gap. So we have, to be honest, crisis. I'll be honest with you. The last point I want to mention is that, again, I say to many officials in Jordan, you know what? We are so busy in our businesses creating jobs, exporting, fighting corruption, fighting bureaucracy, that we really, A, we're not the experts in education. B, we don't have time. You know, I'm personally involved in many national committees, and I continue to do so, but the amount of difference that you can make with this resistance from the government in trying to please the street is just unacceptable. You can sense from my tone of voice that I'm very frustrated because I tend to agree and we need to do something. This brings also, of course, the issue of R&D. R&D should start in the academia. Look at Boston Route 26, look at Silicon Valley, they all started from universities. Of course, you bring the private sector to commercialize them, what have you. But the link is missing. Why? Because of the level of education, nepotism, the acceptance levels. You know, I can go on and on. We have real crisis in that.
Ahmed and Sulaiman, would you like to comment on any of the questions raised?
Maybe back to the point about Islamic finance. I mean, at Majid 14, we issued last year a 5-year conventional bond and then a 7-year Islamic bond. For me, they look identical. They behave on the market, yielding similar yields and all of that. But I think that the interesting part about the Islamic finance is that when we did both issues, that the latter one, the Islamic issue, attracted a very different sort of segment of investors. And if you followed the news yesterday, there was a big announcement in Dubai about Dubai sort of aiming to become the global hub for Islamic Islamic finance. So hopefully that would help the capital flow better from investors and banks and financial institutions who are sitting on a lot of cash and cannot find the right investment opportunities, and between entrepreneurs, SMEs, and everyone else is looking for capital. So the big challenge, I think, for the region remains how to have an efficient allocation of capital between a region that is very rich capital-wise and yet paradoxically has very little entrepreneurial activity. Nirmala Kumar from LBS always asks, so where are the Googles, Apples of the Middle East? And the answer is that they don't exist.
In the making.
In the making.
And I think, and to say the truth, I'm just going to answer probably the R&D side. I think what you said is very true. R&D is, let's say, the elephant in the room. The less than 1% of actually GDP in the Middle East has been spent on R&D. And really, if you throw peanuts to them, like you are going to be developing anything over there, that's substantial. But there is a reason for it, and I think Mr. Nichols mentioned some of them, because you need also a government role to help you even that. The other one is actually intellectual property, though I think there are some countries that are doing strides in it, and UAE is a great example. However, the predominant areas or predominant countries in the Middle East really do not have, even if they have intellectual property rights or laws, it's not really implemented. So really it's very, very difficult to invest in something that you don't have a quick, sorry, not even a quick, but just a return on. And sooner or later somebody will actually steal it from you. So that's another problem that we're facing with the R&D investments. However, things are changing, and I think some of the government-controlled companies, Aramco, as an example, PDO in Oman, they're starting to invest actually more and more, SABIC as well. They're investing more and more in R&D. But I think it's a long journey, and we really need to change a lot of things before this happens. Again, some of the things that we have mentioned, also the bankruptcy is very important, because a lot of the R&D, if you want to take R&D to the private sector, you need also bankruptcy, because a lot of them actually will not end up doing anything. So that's another problem that you have. And just more, I guess, not just intellectual property rights, but actually the implementation of those rights as well becomes very, very important.
All right, thank you so much, all of you guys. Before you go, I just want everybody in literally one sentence, less than 30 seconds, because we've gone over the time. What are the top sort of 2, maybe 3 priorities that you are focusing on going forward? And I'll start with Sulaiman at the end.
I think the focus on venture capital, and it has to be in the beginning sponsorship by the government, and then private sector will take its position there. That's going to be a very, very important area in the Middle East in the coming few years.
Ahmed?
I mean, for us, I'm taking sort of the corporate view of what we do. There are 2 sort of major priorities for us in the coming sort of 2 to 3 years. One is innovation, and that's something we haven't talked of the panel, but that's something very, very important in our business to continue to be relevant in a fast-moving industry. The second is governance, and at Majid Futtaim, we take that very, very seriously, and we have a majority of independent, non-executive members of the board. And the third is really growth. We still are operating in a high-growth environment. We're very fortunate that we're in a high-growth environment, and we have to keep an eye on maximizing the potential of the markets where we operate.
Go ahead.
Yeah, we talked a lot about youth and how important it is, so we need to rethink education. That's a big thing for us. And the second thing, most important thing, is stability of rule of law. And with these 2 things, I think we could grow the region to where we need to be.
Hussam stole my 2 thoughts. I was going to mention, my answer quickly is 2 parts. One is on the national level or regional level, the governments and us, private sector citizens, we need to lobby for that, is to invest in the right education, definitely, and in consistency of investment and legal framework. That's very important. As far as our group is concerned, the most important investment is in our human capital, definitely. The core business, pulp and paper, continue to be very aggressive in investing in countries as well as latest technology, but new ventures we're entering into, and we're very interested into human services, could be training, education, health, what have you, and the second is renewables and waste management.
All right, thank you all so much. Please join me, everybody, in thanking our panel for their excellent work.